Good morning. This is Mark Soderberg, Senior Ag Market Analyst with ADM Investor Services with your morning grain outlook for Tuesday, July 18th. After a mixed opening overnight, agricultural prices did rally as markets add both weather and war premium. On Tuesday, Russia attacked the Ukrainian port city of Odessa with both drone and missile strikes, damaging the area's infrastructure. This just one day after the expiration of the Black Sea Grain Initiative, and this was also likely in retaliation for Ukraine's attack on a bridge leading from Crimea to the mainland. Weather-wise, here in the U.S., we really just don't have much rain to work with here over the next 5 to 7 days. Best prospects for meaningful rain are along the Ohio River Valley in Kentucky, Tennessee, and very southern parts of Illinois. And in the west, we do have some rains forecast for western Kansas, eastern Colorado, and far southwest Nebraska. Extreme heat this week is likely going to be limited to the deep south. However, next week and into the following weekend, a high pressure ridge is expected to shift over the Central Plains and the Western Corn Belt, generating the possibility for widespread upper 90-degree temperatures, possibly even 100-degree plus in many areas of the Midwest, which would be very threatening to yield prospects. Yesterday, speculative traders were light sellers in corn, wheat, and soybean oil, while being buyers in soybeans and soybean meal. Speculative traders continued to hold short positions in Chicago wheat and corn, while being long the entire soybean complex. Crop conditions yesterday, we did see a 2% increase in good to excellent in corn, taking that up to 57% good to excellent, in line with expectations. The biggest increases were along the eastern corn belt. Pennsylvania was up 20% good to excellent, Tennessee up 10%, while Indiana was up 5%. Ratings to me suggest an average yield of about 174 bushels an acre, and that is just below last week's USDA updated forecast of 177.5, a difference of roughly 300 million bushels. 47% of the country's corn crop is currently silking, and that is above the historical average of 43%. Soybean conditions improved 4% to 55% good to excellent, slightly above expectations. The crop condition index that I calculate did improve to 79.6, up from 78.9 last week. While this is still the lowest since 2012, improvements were widespread as 16 states improved while only 2 declined. Suggested yield is 51.5 versus USDA's 52 bushels per acre, and 56% of the crop is blooming, while 20% setting pods, and that's just above the historical average of 17%. Winter wheat harvest has reached 56%. Spring wheat crop conditions did improve 4% to 51% good to excellent. This was above expectations, and I actually thought we might see steady to even a bit of a decline with lack of rain in North Dakota last week. 86% of the crop is headed, and that is just above the historical average. So as weather markets start to heat up again, so will the price volatility. Right now, I'm still thinking D's corn will face some pretty stiff resistance in the 525 to 530 area, largely due to weak demand. And November beans right now, which I think have the most upside potential, are currently threatening the July highs, which are just below 1392. Thanks for listening, everyone. I hope you have a wonderful day.